Fashionably late. I am 3 minutes late. My apologies. I have not had a technical error in some time. Just had one right now. For some reason, wouldn't start for me, but I finally got it going. Hopefully this thing works and continues to work. I don't understand why we would have live stream errors in today's day and age. Like, the internet that we pay for nowadays is so bloody quick. Every time I check it, go to speedtest.net, everything's perfect. Every once in a while, I try to sign up on software to do a live stream. Just little glitches. But I am going to cover some stocks today. Well, some of them have some little glitches. I'm going to introduce to you today probably at least 10 stocks. I know the title of this video is 10 Canadian microcap stocks you need to know. I think I've got a little bit more than 10 stocks. I've got a couple American stocks in there. If you watch all of my videos today, you're probably going to get introduced to maybe 2 stocks that you've never heard of before. And if you haven't watched all my videos, some of these will be absolutely new to you. And I'm going to cover everything from some of the stocks that have been going up quite a bit recently, talking about how there's still potential. And I'm going to introduce you to some stocks that are maybe a little bit beat up. You know, some people like those cheap beat up stocks. They're looking for those, a whole range of different stocks. I just wanted to have fun today because yes, there are some people up 33% at least on ADF Group. That stock is absolutely crushing it. Hello, Cameron, 3 minutes late, but the intro was worth it. I'm going to have to go back and change that. I can edit the start of my live streams. I think this is one opportunity to do that. I hope everybody out there is making money. We've had a nice bull run now for what? January, February, March, half of April now, 3.5 months, half of December. We're probably on about 4 months of a nice bull run, especially in Canadian microcap stocks. Hopefully it continues. Starting to see a few cracks show up recently, but only on some of the questionable stocks. Some of the best stocks are still going up, and that's what I'm looking for. And if anybody has questions, wants to stop me, I will be paying attention to the comments here. So as I go through some of these stocks, if you want to have a quick chat, I'm probably not going to, stop for 30 minutes, but I'll have a quick chat if you have any questions. Because one of the things is, if we're looking at the bull run maybe coming to a bit of an end, maybe some of the stocks are showing a bit of weakness. One of the things that I am trying to show with this graph, I don't know if this is considered a graph, flow chart, whatever it is, that I keep trying to beat into people is that on this channel, 100% of the stocks that I look at, pretty much 80% are just not good. They never make this channel. That's part of what I do. Is that I'm looking at 100 stocks. Out of those 100 stocks, only about 20% make my watch list. Those are the stocks that make my channel. Once they make this channel, once I'm looking at a stock and covering it on this channel, you still need to go do your research and try to determine, because of those 20 stocks out of 100, 80% still just stay on my watch list. Typically, if I'm investing in microcap stocks, I am looking for the top 4 out of 100 stocks. I am looking for the top 4%. So when I make a video, please do not forget, you need to go do your own research. You need to go invest your own style, learn how to invest. That's part of what I'm discussing here. I'm not giving financial advice. I like creating great discussion, talking about how myself and other microcap investors invest. So hopefully people learn. I am not a financial advisor. I do not give buy, sell, or hold alerts on this channel. What we are doing is trying to create a community of people talking about those top 4% of stocks, and maybe people are investing and making money. One place where people have been investing and making money recently is infrastructure. Lots of times I talk about this, is that I'm looking for a stock, but a stock can sit there and do nothing for a lot of years until it gets a catalyst. Sometimes what that catalyst is simply an industry sector that is booming. And right now, infrastructure is absolutely booming. There's quite a few companies here. So I was making a video similar to this. I was going to have 10 screaming hot stocks or whatever I was going to name it. I don't remember. And I was going to list 10 of the hottest stocks in the Canadian exchanges. 2 of those were Enterprise Group and ADF Group. Now, Enterprise Group I've been covering since about 42, 43 cents. ADF Group since about $6. You know stocks are doing well when I take a little snapshot here of one of my portfolios, one of my watch list portfolios here on, I think it was Yahoo Finance. And the only two stocks that were up on the day were Enterprise Group and ADF Group. Now, when I was making this video just last week, they were sitting at roughly 93 cents and $9.63. And boom, they shot up quite a bit. So today, or close to today when I took these pictures, $1.12 for Enterprise Group and $12.53 for ADF Group. Now, what are people missing out here? Why did they go up so much? I covered this for Enterprise Group. So they were at about 93 cents when this BNN Bloomberg video came out with Jordan Zingberg's market outlook, talking about how Enterprise Group at 93 cents roughly had another 50 to 100% upside potential. People saw that. A lot of good investors saw that, not just a bunch of day traders. A lot of these were buy and hold investors. Took a look at Enterprise Group and bought the price up. It went up 32.25% that day. It went to $1.23. Now, it's interesting for me because a lot of people always look at these companies, look at the share price, and then decide, oh, it's gone up too much, right? There's also articles out there from Microcap Club recently talking about how there's always a better buy. If you think a price is too high, just wait a week in microcaps, it will come down. So Enterprise Group, I think it closed out today at $1.12 Canadian. These are all Canadian prices, but it did hit as low at one point, I believe today, as $1.08 Canadian. So there's still potential in some of these stocks that go down, get a little dip, try to consolidate at a good price. Now, if you're going to go look at Enterprise Group, do not forget to look at why this stock is going up so much. This is Evolution Power. So what they're doing, what they've done is they actually buy up LNG generation stations. So when you're out in the field and you have a drill rig or construction site or a camp or whatever you need power for, instead of having like 5 to 10 to 15 diesel generators running around the site, and they're noisy and they're, toxic, they're terrible to smell, they're terrible to put up with, they require a ton of maintenance. You can have this basically one setup with their natural gas. So this is Evolution Power is what's really driving the growth here at Enterprise Group. They have 3 to 4 other businesses that you could look at, right? There's more to it than that, but that is the main driver. ADF Group. I've said this a few times, boring is beautiful is what I keep hearing about ADF Group. I don't think they're that boring. I mean, this is a steel fab structure construction industry type stock. They make or help to make some beautiful buildings here, some really cool bridges, all the way down to the Syncrude centrifuge plant. Maybe not the most beautiful thing you've ever seen, but making people money. And that's what ADF Group is doing as well, is making people money. This was the very first stock that I put on this YouTube channel. So I was previously canceled by YouTube. This is now my second channel. This is the first video I put on this channel, was ADF Group. Why did I do that? The numbers were extremely impressive. A lot of people saw it, right? Even though their revenue numbers were not struggling a little bit, but 2023 there was a little bit lower. This company actually installed robotic systems into their main manufacturing plant. As you could see, it massively increased the adjusted EBITDA numbers and the net income numbers to the point where I have a video on them that I will link down below in the pinned comments, where I go through their most recent earnings. Their recent earnings, revenue of $331 million, up by $80 million or 32%, net income up 152%, cash flow from operations of $77.9 million, and they still have a $510.9 million order backlog and growing. This is one of the best earnings that I've seen in years. I actually don't remember the last time I've seen such a good earnings from a microcap stock, right? Absolutely stunning. One of the things that I wanted to point out, because I keep hearing, not going to say complaints for certain stocks, complaints on certain things. People don't like certain things. One of those things is when a price goes up. They don't like buying the 52-week high. They always look at a share price. They always want to buy these damaged stocks. And I'm going to show you a couple damaged stocks if that's what you like investing in. But one of the things with these stocks that continuously have 52-week highs, it's usually for a good reason. And usually it's a good reason because of stuff like this, earnings like this, right? So people that did not buy ADF Group over the past 52 weeks, they missed out on 433% in gains. This just kept going up, going up, going up, going up. But even recently, I had to point out that ADF Group went to $10.36 Canadian just in March. I think it was the early part of March. By March 24th, I have a price there. It went down. It crashed. People were calling it a crash. It went all the way down to $8.07. If you'd have bought it $8.07 when it went to $11.80, you had 46% gains in 2 weeks. In 2 weeks. And now it's $12.53. So think about your gains now, right? So a lot of people complaining, oh, I missed out, price is too high. Make sure you go understand how to value a company. You look at what they're doing, their forward cash flow, their growth, everything just absolutely beautiful. And make sure you understand how to value, because a lot of times there's, I think people are still PTSD because a lot of new microcap investors were told to buy the dip basically through the back part of 2021, all of 2022, most of 2023. And instead of buying the dip, you were kind of catching this falling knife. A lot of microcap investors ended up down 50, 60, 70, 80, 90% because there was a lot of hot garbage stocks. But when you get a good company and you do get a pullback, you do want to make sure that you know what you're doing in the microcap space and you know when there is potential to buy. Another infrastructure stock, Matrix. I recently covered them too. This is one of my favorite thumbnails. So they actually do, what is it called? Cellular concrete. So cellular concrete, they pour it basically out of a hose. They're pouring concrete out of a hose. It can run about 1 kilometer, I think it is. 1,000 meters, they could pump this concrete. It's not true concrete in the building. The only thing wrong with this thumbnail is they're building like this cement structure. That's not actually what they do. Matrix cellular concrete is used basically in place of dirt, fill, gravel, that type of thing. Like anywhere that you can put dirt is somewhere that Matrix cellular concrete can go. That's right. When you talk about total addressable market, there's a huge total addressable market there. And the reason is, it's for infrastructure, right? So instead of having to get this whole system going with excavators and haul trucks and bulldozers and packers and trucking in dirt and packing down dirt for infrastructure, getting it all graded, basically you could hire Matrix. It does the same thing with cellular concrete. You can't build a building out of it, right? It is for infrastructure foundations. That's what they do. One of the reasons to invest here, one of the things to look at is the average age of government fixed assets. So a lot of infrastructure might need some replacing over the next few years. But one of the main challenges, I think, isn't necessarily the age of our infrastructure, it's change. Some of these microcaps, their main struggle is change and change management. So typically what's happening with some of these smaller companies is they're bringing in something new, they're bringing in something different. So not only do you need to market it necessarily, you need to show people, make sure people know that it exists. They also have to want to use it, understand what it is, right? You need to be able to budget for it. You need to be able to convince your boss that, hey, we should go spend $20 million on this Matrix cellular concrete, right? Sometimes that's hard. This is another one talking about like 52-week highs. It went up, I think, to about 42, 43 cents. It's been pulling back recently. It's sitting at about 37, 36 cents Canadian. I think it went down to today. So you have to look at the price, you learn to value, and try to make a decision there. ADF Group is a cash generating machine. That is the beauty of that business. So ADF Group, when you look at the price, when you go research that stock, have a look at their cash, have a listen to the conference call there. They talk about 3 to 5 years more of growth, similar to what they've been getting, right? If that's even close to possible, absolutely fantastic for these shareholders. As well as in, 3 to 5 years, I have no idea how much cash they're going to have. It's going to be a lot. So whether they use it on share buybacks, whether they merger and acquisitions, dividends, I think they're already paying a 1 penny dividend twice a year. It's nothing. But have a look at the cash that this company is producing and what they could potentially do with it over the next little while. Bought ADF at a 52-week high months ago. It's then made a bunch more 52-week highs. Exactly. That's what you want to do, right? That's what we want to see. Now, Because not everybody wants to buy, these stocks going up, buy into strength. That's typically the can slim method. A lot of people are looking for beat up stocks. They're looking for value. I understand why. Typically with the beat up stocks, what people are looking at is one of the, superpowers of microcaps is that if you could buy a stock and not only does it grow like ADF Group did through powerful earnings, generating cash, doing well as a business, but you're also looking for these companies that can improve their multiples, right? When we're talking about valuations, if you're looking for companies with low multiples, you potentially think that they can get to higher valuation multiples, then not only do you get that share price increase due to the company performing better, you get that share price increase due to the multiples improving. So some of these beat up stocks that people are looking at that I've highlighted before on this channel a while ago. One of them's Ready Shred Capital Corp, TSX. It's COOTV. I like saying COOTV. That's their ticker on the venture exchange here in Canada. Now, they do paper shredding, as you saw. Boring, 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 boring. What's not boring is their numbers, right? Revenue growth driven by new client acquisitions and acquired locations. 11-year consolidated revenue trend in thousands of Canadian dollars. This company just hasn't stopped exponentially growing its revenue. That's when you look at a graph like this, that's all there is to it. What it has done is operating leverage continues to be improved, G&A costs well managed. So you look at their debt, you look at their expenses, they've done a good job of bringing those both down. So when you look at some of these things, you look at, this type of revenue growth, you look at bringing their expenses and their debt down. What's the problem? Paper shredding. It's got to be paper shredding. Let me know if you think that there's something else wrong with Ready Shred Capital. I think people see it as the milk ban. It's going away. We don't use paper anymore. Why would I invest in a paper company stock when this industry is dying? Ready Shred is saying that it isn't. There's still a significant amount of paper usage, especially in legal departments, stuff like that, where paper has to be printed. We have to sign it. We have to keep paper copies, as well as we're going through all this historic paper that we've built up for 100 years now. They can't possibly shred it all in one day. So between going through the legacy paper that's been stacked up and we can finally get rid of, as well as some of the existing industries that are still using paper, there's still lots of paper shredding to do. They're also looking at getting into electronic paper shredding, like electronic record shredding. So that one is growing slowly, but it's pretty tiny right now. But it's interesting after looking at those revenue figures, looking at, revenue going up, expenses going down, analysts rating, not that this means anything, but I like putting it up there for fun sometimes. Analysts say it's a strong buy at a one-year price target of $6.18. Ready Shred has done nothing but go down. Go down, go down, 5 years down, 1 year down, year to date down, 6 months down, 1 month down. You have to wonder if what this company needs is maybe some marketing for, hey, we're not going out of business, because the numbers don't seem to be doing it. Another one is NTG Clarity Networks, a little bit beat up. Now, people will say, hold on, Cameron, this stock has gone up recently. This is not a beat up stock. I think I would beg to differ still. So they say that they're leaders in delivering network, telecom, IT, and infrastructure solutions to the network service providers and medium and large enterprises. They also somehow are incorporating AI into stuff now, whatever. That's great. But when I looked at that, obviously right off the bat, maybe some of my biases pop up. I'm like, I'm not sure how much of that we need anymore, right? IT infrastructure solutions. We're not running cable in a lot of places. A lot of things are wireless these days. Well, they moved a bunch of their revenue over to the Middle East, where they're still using a lot of this stuff. And it has worked substantially. So if you look at that chart on the bottom left, this was their revenue and projected revenue all the way back 2021, 2022 when they put this out. And they were signaling even back then that, our revenue, something like Ready Shred, is going to go up exponentially here. I was covering this stock at 3 cents Canadian, right? It was bouncing around between about 3 and 4 cents Canadian when they put out that slide talking about their revenue finally going up exponentially. All of a sudden, it just takes a catalyst. So NTG Clarity announced a $50 million revenue target for 2024 and a whole bunch of new purchase orders for work valued at, $6.5 million. It got introduced, I believe, to Microcap Club as well as a couple other places, right? It got some marketing. It got talked about. The management team at NTG Clarity came out and started marketing themselves. Now they did have a 1-for-5 reverse split. It went from 3 cents to 15 cents on the 1-to-5 reverse split, but it went from 15 cents to 40 cents recently on this news, on this attention, on this marketing. All it took was a few investor eyeballs to go on this stock. It went from 15 cents to 40 cents, right? It was actually up quite a bit higher. As you can see, the little spike, it's down to 40 cents today. Now, I still call it beat up because one of the things that I'm seeing here might be a little small for you to read. Still a market cap of less than $17 million. Yahoo Finance is saying 16.89. They have an enterprise value of 23.8, so that's a little bit higher. They do have some debt that is mostly owned by the owner of this company, but that's on top of 2024 expected revenue of $50 million. So, I mean, even just a very simple forward price to sales, what is that, 0.4? Something ridiculous like that. And this company says they're going to continue to get exponential revenue growth and they're going to continue to be profitable and pay down that debt. So I think this one's still a little bit beat up, NTG Clarity Networks. But if that isn't beat up enough, I got a couple fun ones, and I had to throw these in there. These are kind of Canadian microcaps. I know that's the title of this. This one, the next two are actually American. One's cross-listed onto the TSX, so that's why I thought I'd include it. But I've been watching these two stocks. American microcaps are massively volatile, and when those stocks get beat up, when they get undervalued, they get really undervalued, right? And it's a different world. One of those is Quipt Home Medical Corp. So again, you look at the technicals on this one, it kind of reminds me of Ready Shred a little bit here. You talk about an analyst rating, strong buy, analysts love this stock. It's sitting at $5.22 Canadian, 1 year price target of $13.75. If only investing was that easy, right? If only analysts got it right, we could just go online and find a good analyst and listen to the analysts, and boy, would we all make a pile of money, right? To go from $5.22 to $13.75. In the past year, this stock has done nothing but go down. 1 year, down 42%. But I mean, I've covered a lot of scams before. You know me on this channel, right? I don't cover stocks that are going down 42% and deserve to go down 42%. One of the interesting things for me is this is another stock in Quipt Medical, and I know there's other problems. This is just a quick introduction, just to get you looking, just to go see if you could find the red flags. What's wrong with this stock that is holding back the share price? Is there an inflection point in the future that could change that and send the share price up to that $13 price target? That's up to you to go to decide. Because I'm fascinated that when I see that share price go down and down and down and down, when you look at that top chart there, revenue keeps going up and up and up and up. Over the same time period, the share price has just been going down. The revenue has been going up. Now, I know that the operating expenses and other expenses are the problem, right? It seems pretty volatile. I would love to talk to a Quipt Medical shareholder that's been holding this for a few years to talk about all the challenges. Because when you go down there to the bottom red arrow at the bottom of that slide, talking about net income or earnings, some quarters, they must just be ecstatic. You got a net income here, $5 million, $1.7 million, $6.3 million. And then other quarters, you have massive losses, 586,000, lost 1.3 million, lost 1 million. So this company must be absolutely frustrating. But at the same time, it doesn't make tons of sense to me sometimes when I see share price going down, company seems to be improving. This is healthcare, and this is one of the industries. I talked about infrastructure, how sometimes you need to find an industry, wait until the industry starts booming a little bit, and then all, tide going up rises all boats. For me, that could be healthcare. Quipt is in the healthcare space. They have a diversified product offering, ventilation therapy, sleep therapy, therapy, home oxygen therapy for seniors or anybody that needs it. Just doesn't have to be seniors. Again, it looks as though the business itself is improving, just not the share price. But this is one of those industries like infrastructure that I'm kind of trying to pay attention to here, because one of the things I was talking about today is that I can go online right now and I read over and over and over article after article about how Canada specifically is in a housing crisis, right? We're bringing in people. Immigration is huge right now. We don't have the houses for people. House prices are going up. We are in a housing crisis. But one of the things that's being ignored is we're also in a healthcare crisis here in Canada, right? So immigration as well. I know they bring in a lot of people, brilliant people. Canada has some terrible education laws. So a lot of people who are educated in other countries can't just come to Canada and get those skills and competencies transferred over 100%. So a lot of doctors outside of Canada who are moving to Canada aren't doctors anymore. I think there is a catalyst coming in Canada, at least, where after we get over this scare of the housing crisis, that the next thing up on the docket here is going to be a healthcare crisis, that we keep getting more and more people and we have less and less doctors, or at least the same, but I think it's going to be less thanks to doctors retiring. And I know you're going to say, look, Quipt is in the United States. Their healthcare seems to be a little better than Canada's right now because people still want to move to the United States. Their education isn't as bad. It's easier to transfer over your competencies. But they also have not only an aging demographic here, as they expect to get older year by year and decade by decade. They're supposed to go, Americans age 65 and older projected to increase from 58 million in 2022 to 82 million by 2050. But not only is there going to be more Americans, aging quicker, there's going to be more Americans with more money. Some are working longer, some are wealthier than we've ever been before. So an aging demographic with more money is interesting for me for healthcare. I think this is the last really beat up stock, is A2Z Smart Technologies. I covered them probably about 18 months ago on my last channel. They were over $1 US. They're down 10% today, down to 38 cents American. You could see it's just been a roller coaster ride, but mostly down a mountain, right? Share price has been absolutely obliterated. These high risk American stocks are fascinating. But there's still potential here. So what this company does, Smart Cart benefits to shoppers. So this is where you basically go to a grocery store. They give you that giant iPad looking thing. You attach it to your shopping cart. You have an account linked to it, and it'll show you where all your food is. It'll give you all the coupons for what you need. It'll show you all the flyers. It'll guide you around the store. It's basically your own personal shopper. Now, one of the problems with this company, I think, is that people are scared because this probably isn't going to work in North America. We're all criminals. We're all, right? Like, I can't picturing this working where I live. I think it would be stolen. It'd be ripped off. You'd see people walking in the grocery store, grabbing this thing, packing it under their arms, and just taking off running, right? So there are problems with it. However, in places where this would work, it does seem to be taking off. They have a significant backlog of carts here. People are buying it in France, Australia, Belgium, Israel, New York. Well, New York's one of the rare places in the United States. I'm not sure where you'd run off with it, right? Thailand, Malaysia, they're starting to get orders. And this is another company, as they're starting to get orders, share price just keeps tanking. I find that quite interesting. Go take a look. Now, I know why. Net loss, $13.8 million. That's pretty common for a lot of these US-based OTC stocks, right? But I think the potential is there because one of the things that institutional investors love and that, a lot of American investors love too is data. A lot of data stocks do quite well. If you're the first in your field that can collect certain amounts of data, that's something that will usually do well as a company. And when I look at the amount of data that a tracked, account-driven, AI-powered shopping experience shopping cart can bring to companies seems pretty significant to me, right? You're not only tracking what people are buying online, You're not only tracking them at a checkout where you basically gather very little information other than what people are buying. You're tracking what other products they're looking at, what they're putting back on the shelf, what aisles they go into, what they look at in those aisles. That's a heck of a lot of data. I think that has potential. Talking about California nanotechnologies. Yeah, this wasn't on this video today. It's gone up quite a bit. I have videos on them. I can link into my pinned comment. California nanotechnologies has a moat. Everybody loves a moat, and their share price has done very, very well in 2024. I was hesitant to tack this onto the beat up stocks. I'm starting to get into some stocks that I think have some significant potential. Now, Legend Power Systems is both beat up, high risk, and could potentially have some significant potential. They are on the TSX Venture Exchange. You could see here in the past year, they are down 47% despite that little pop-up recently. The pop-up in the past month is 52% in the green. So they were sitting at like 9 or 10 cents. Now they're up to 16 cents. They took a 15% hit today, which is part of the reason why they made this video, right? Are they about to explode? Are they beat up again? What's going to happen with the stock? Well, the interesting thing for me with Legend Power Systems is this is one of these companies I've actually been looking at now for about 18 months. Go look at their product. Go look at SmartGate, it's called. I don't know why I didn't put SmartGate on this slide. That's their main product that they're trying to market right now. What Legend Power Systems does, what SmartGate does, is it controls the power grid. But there's a bunch of companies that control the power grid from, the power source all the way to buildings. SmartGate and Legend Power Systems is trying to offer this product to control the power grids in large commercial and infrastructure buildings. So what happens is you get a fluctuating grid. When you're sitting in an office building, lights flicker, lights go on, lights go off. Maybe it's just a quick flicker, whatever it is. We have a lot more renewable energy these days hitting our grids, so there's fluctuations there, right? Recently, in a couple places, there's been power outages, rolling power outages in places as we have trouble getting energy sometimes when there's specific natural disasters or other things going on. SmartGate controls the energy systems in buildings. So it can help maintain, you don't get elevators blown all the time. It can help keep your infrastructure in the building running better. You don't get these wires blown. You don't get equipment blown. You don't get anything like that. I really, really like the product. The problem is I've really liked this product for a long time. They've done basically nothing with it, right? Until now. Recently, Legend Power Systems reports a record purchase orders received at over $2.5 million. So after sitting around, I think shareholders were confused. That's why the share price was going down and down and down and down and down. They've had this product for a while. Nothing's happening with it. Nothing's selling. What's going on? They finally start selling, and they have more discussions coming up soon to sell more of these products. So people are starting to wonder what kind of company we have here, because SmartGate is a product that, in my mind, is one of those products that works. It should be everywhere. It should be in absolutely every building to help control, to help reduce the energy usage out there, right? The cost of energy is going up, and that's something that SmartGate can help with, but until recently wasn't selling. Now it is. What is this company going to look at? One of the problems is margins. Go look at that. Where are their margins going to be? We don't know with some of these things. Now, potential. Stocks with a little bit more potential. I've covered some stocks that have already gone up. I've covered some stocks that are a little bit beat up. So what are some stocks that I think have some potential moving forward to kind of end this video? On the bottom, I covered my first Australian stock, EZZ Life Science Holdings Limited. I got a lot of complaints because if you're in Canada or sometimes other countries, some of your brokerages won't let you buy internationally, right? So Cameron, you're a Canadian microcap stock. Why are you covering an Australian stock? For Australians or anybody with a good brokerage, like, Interactive Brokers that can buy international stocks, you're welcome. I covered EZZ Life Science Holdings at 62.5 cents. They're now up to 85 cents, and they look like they're just going to keep going up at this point. But the main stock that I want to talk about first here, or mainly, is SCI Engineered Materials. So we had a comment before about California Nanotechnologies. For all my Canadian investors that love California Nanotechnologies, or can at least see that this stock has done well. Why has it done well? You've done some research on it. You understand the benefits of California Nano. Go take a look at SCI Engineered Materials. This is a US-based OTC stock. I covered them at $5. They're now up to $5.40. They keep traveling upwards. The reason they remind me of California Nanotechnologies is they do a bunch of stuff that I totally don't understand. I admit that on the video. And look, I've spent my time over the past 2 to 3 weeks now researching sputtering targets and ceramic powders. Those are two of their main products that they're using through their chillers, their bonding tables, their grinders, their vacuum hot presses. They have all this unique products. All these unique products are producing some advanced materials that most other companies simply aren't producing, like sputtering targets, ceramic powders, right? They don't have a moat like California Technologies, but I would suggest that there's really not a lot of competition. Where I'm excited about this industry, where I'm excited about this company, is the reshoring of some of these high-tech electronics from places outside of the United States. What they produce is thin film coatings, products that can help you get better thin film coatings. They're into industries like electronics, semiconductors, and other, military and other industries that the United States is really starting to reshore and bring manufacturing back home. This is a company, SCI Engineered Materials, that I think could really benefit through some of these products. There's a couple other smaller companies that do this in the United States, so they don't have a moat, but there isn't a ton of competition. When I go look at their valuations, I called this company priced for success. They're basically undiscovered stock on the OTC. It's different than most OTC stocks, right? It doesn't look as volatile. It has consistent revenue. It's actually profitable soon, or it is profitable. I forget, something like that. And you look at these valuations, and if this was a Canadian stock, I would be featuring this stock just about every video, right? Looks pretty good. However, number one, recently, the last kind of stock that I'm going to introduce in this video before I lose my voice is BQE Water. This is Smart Mine Water Management. I've made these plays before. I've had these discussions before. One of the things I love to do as an investor is, if I'm bullish on an industry, but I don't want to go into the industry and pick out from 100 or 1,000 different stocks within that industry which one is the best, because it's almost impossible, I look for these sideways plays. So if you look back to the start of my video here, when I was looking at Enterprise Group is in oil and gas, but they're not an oil and gas stock. They're not an oil explorer. They're not a seismic company. They don't produce oil. They don't, manufacture anything. What they do is they rent natural gas electrical systems to oil and gas producers. That's a sideways play. Enterprise Group worked extremely well for me. When I look at mining, I'm bullish on mining. We need more mines. We need more mining material. We're talking about, this is not going to stop where we're going to electrify more things in the future. Whether, I know the big discussion right now is EVs are failing. Nobody wants an EV anymore. It doesn't matter. We need more battery storage. We need an evolution of batteries. We need more electrical power into the grid, right? We're going to need more mining. If you're bullish on mining, BQE Water is into smart mine water management. So instead of having to go and pick through hundreds or thousands of junior miners and trying to figure out which junior miner is going to be the best and which junior miner is going to go to zero and risk your money in that direction, this is a stock that is really improving, and they're marketing their products to mines that are in operation. So it's already quite de-risked at this point, right? And it's shown. You look at their numbers, we all should have seen this one coming. Sometimes we can't. That's why we cover up some of these, or I cover some of these beat up stocks, because people don't see it coming. I've already talked about a couple other companies who have been improving, their share prices going down. Well, we look at BQE Water. Their share price has been improving recently, but has it been improving as much as their financial fundamentals, right? We look at this revenue going up, recurring revenue to total proportional revenue. They have lots of recurring revenue. Working capital is improving. In the past 5 years, they've 4x their recurring revenue. BQE Water is really on a roll. Go take a look and research this stock. Now, one of the main reasons that people complain or don't like it or don't want to invest in it is the share price, because this is supposed to be a microcap channel. This is supposed to be a penny stock channel, right? Cameron, where's my penny stocks? I want a 2-cent stock. I want a 3-cent stock. I want to buy 100,000 shares and lose all my money. That's not BQE Water. Look at their share price, right? Their float is so bloody low. I think they have 1 million shares on their float or something ridiculous like that. $51. I started covering this stock at $33. They're already up to $51. This is another one that's taken a bit of a pullback. It went to $55 recently. That does not matter. 52-week high after 52-week high after 52-week high. Those are the kind of companies that we want to look at. And again, when I look at some of the valuation metrics here and everything, right? $60 million market cap, $55 million EV, because they have cash, they have no debt. You know, the trailing P/E is high, but go look at the potential for this company as mines, not only the mines that are currently in operation, start using BQE Water, but also as more mines come online, as more of these mines are willing to change and do something different and recognize how helpful this company is to their process. I think this one has a lot of potential. BQE Water is number one on this video right now. As does this person. Their CEO was buying shares recently. So that's absolutely fantastic as well. Don't forget, if you want to keep continuing to discuss these stocks and where most of these stocks were originally discussed, researched, I have a free Discord, which I will link to down below in the pinned comment, as well as I have a paid Patreon starting at $3 per month. Love that slide, though. That's absolutely perfect. How's everybody doing? If you're watching on YouTube and you don't want questions or answers or any more chat, thank you. I really appreciate your time. I hope you go look at those stocks. Some of those have some absolutely tremendous opportunities. Don't just throw the ones away that are already up. There's still potential there, right? Don't just automatically think that because the stock is beat up and the multiples are low, that those multiples will improve. Please learn how to invest in microcap stocks, penny stocks, learn how to value, and go look, find comparables, find some other examples of stocks like these ones that have done well, right? Thank you for your time. In the meantime, anybody has questions, comments, concerns, wants to chat, questions about any of the stocks on my channel, I'll hang around for a few minutes and see what you got. Somehow I missed some comments here. Let's see. Comments are not loading. All I got is this wastebasket. And I'm looking on here that there could be more. Well, let's see. Do I have a summary? Just in case nobody's asking questions. This is the main thing for me, right? I know it's hard. This is the hard part, but microcap investors, we really have an advantage compared to institutions and hedge funds and everything else. You know, we can get by with low volume. We can get by with not a lot of people buying. We can get by with volatility. If we do our research, find the top 4% of the stocks, right? I'm not a day trader. I'm not even a trader most days. I'll occasionally trade a stock. I have videos where basically I'll trade it if I know it's going to go up and I haven't done my research. My research isn't done. I'll trade it. But generally, I'm looking for stocks that I want to buy and hold long term. It's finding those top 4% of stocks, right? Congratulations to people that found ADF Group. We were talking about that, how some people online were talking about ADF Group, 4 or 5 years ago. This was a 60-cent stock 4 years ago, right? 60 cents, $12.53. If you talk about, the potential, the superpower of retail investing into these microcaps, it's getting in first. It's getting in at the right price. It's getting in when it should be, everybody can see or should be able to see what this company is doing, but not everybody can buy it. Larger institutions can't buy it. They have to wait till it goes up. So you tend to buy low. As more retail investors start to see what's going on with the stock, it starts going up. You start making money. Eventually, it gets up enough. You get institutions buying up, and that's really when it can take off. So congratulations. Congratulations, too, to shareholders of Enterprise Group. I know they kind of backpedaled a little bit. I know more people wanted that $1.23 price to stick around. That was a bit high. That was a little bit of video excitement from the BNN Bloomberg. At the end of the day, to go from about 43 cents to $1.08 in the past year, we are hoping that it consolidates around the $1.10 to $1.15 mark. It sits there for a while and then continues to go up. But I mean, absolutely congratulations to people there, right? And some interesting stocks. The US stocks are really volatile. This is an interesting one for me, Legend Power Systems. Go take a look at SmartGate. I mean, when you look at TMG, Thermal Energy International, is it? That's a small cap discoveries stock pick. That's up a tremendous amount in the past year. TMG is. A lot of people love that company, love that stock. And what they're doing is actually similar to Legend Power Systems, except they're doing it with boiler rooms and heating. Legend Power Systems is trying to do it with electrical energy for buildings, large commercial and infrastructure buildings. I think there's a lot of potential in that. There's a lot of questions there. But if they can answer those questions, I just think there's a significant amount of potential there. So very interesting. No more comments. I don't need to have any arguments about any other stocks. That's absolutely fantastic. Thanks for coming out. Really appreciate your time. Hope to see you again next week for another Monday evening live stream. And I hope you're making money this week. Come have a chat with me in one of the Discords. I can't wait to see you there. We'll find the next great penny stock.